Hello dear traders, welcome to the weekly forecasting session. First of all, we will review the last week market and we'll see what ramifications it can have on the coming week. In the last week, all the control were in the hands of the bulls and they pushed the market all the way up to this point. By looking at that, we also notice that the market is in the ascending channel. And what is the ascending channel? This channel forms when the market is making higher highs and higher lows. But it is also believed that sooner or later this channel will break down to the downside and the market will transition into the downtrend. Apart from it, if you have watched my previous forecasting sessions, like a month or 3 weeks ago, I had mentioned this fair value gap, and I mentioned that this fair value gap could be a menace to the down run. And this is what happened. The market filled this fair value gap in the last couple of days. And by filling that fair value gap, the market also mitigated this order block and the order block above this order block. So what we noticed, we are also having a fair value gap, inversion fair value gap, which is also called as IFVG. And we draw the fair value gap to the right side. We extended it to the right side and we saw it acted as a resistance. The market touched this point and the market made a pullback move. And to see this above fair value gap, inversion fair value gap as a resistance, we can also look at this fair value gap at this point, which is acting as a support. Now we are skeptical about the gold market, what to do in the coming week. So the first sign we are having that the market has touched the upper trend line and the inversion fair value gap, and at that point we are also having this order block which the market mitigated. So this is the sign which gives us the signal that we can be bearish on the gold market, but the signs we are having is the core data. The core data is also called as the commitment of traders report. So there are two main groups, non-commercial and commercial. What we will do, we will be following the non-commercial. So the non-commercials are having more long contracts than the short contracts. Okay, the short contracts are about 48,000 and the long contracts are more than 300k. So we will follow the non-commercial. If they are long on the market, we will also try to be long on the market, and we will do the opposite of the commercial. So see, the commercials are having more short contracts than long contracts. It means if the commercial are short on the market, we will be long on the gold market. So now we are skeptical what to do about gold in the coming week. So we will wait for the gold market to either break this high and break this inversion fair value gap, which will then act as a support, which will provide the support to the market, and the market will likely go above this high and above this inversion fair value gap. It will provide support to it, and boom, the gold market then will 100% make a higher high, an all-time high, which can be likely at 2500 level. So guys, this is what we will do. We will wait for the market to give us a clear direction. If the market let's say if the market makes strong bearish candlestick in this phase of the ascending channel, and even it breaks the ascending channel to the downside, then we will try to be bearish on the market, because it will likely to clear to go below this area, because this area is the area of relative equal lows, and there is likely resting a lot of liquidity below these relative equal lows. So that is what we will do in the gold market. Now let's move towards the Euro USD. So guys, similar to the gold market, in the Euro USD, here the bulls were also having the control last week, because it is a daily time frame, and we can see how the daily time frame, in the daily time frame, the candlesticks are closing and the highs are near the highs. Now let's look at the core data. Again, we will be following the non-commercials, and we will do the opposite of what the commercials do. Here the non-commercials are having more contracts, more long contracts as compared to the short contracts, but the difference is not too much. And if we look at the change, more like 1500 contracts, long contracts, were added to the bull run, and 11,000 contracts were cancelled from the short and were added in the long contracts. So by looking at the data, we can say that the market might break this high and might take liquidity from this high, and then if the market had to continue its upward run, the market will likely make the pullback move. The market will have to fill these gaps. The market will have to fill this gap and mitigate this order block. But if we look at the Euro USD market from this point to this point, the market is not making clear higher highs and higher lows. So it all depends on what happens and how we react to the market. But keep in mind that the market is likely to break this high at this point, break this high, and then we will look at the market, what happens, what kind of candle it forms and what kind of patterns it forms. Then we will react to the market accordingly. I'm also having the idea that here at this point we are having equal highs, and above the equal highs the liquidity is resting, but before that equal highs we are having this high. Before the equal highs we are having this high, and we are having this high. The market will have to clear these highs. One extra thing which might tempt the market to come to the downside is these equal lows. Why? Because below the equal lows there is resting a liquidity pool. So guys, now it all depends on the economic indicators, what news events we are having in the coming week, and we will act accordingly. If we see that the news events, the economic indicator is favoring the bullish run, then we will try to enter in the bullish run at this point. When the market fill the gap and mitigate this order block, we will put our stop loss below the order block at this point, and we will target the high. We will target then this high. And if economic indicator is likely, if the economic indicator follows the bear run. So the market will take liquidity from this high and then it will change its direction to the downtrend. Now let's see what we are having in the GBP USD. So guys, now let's first look at the core data. And as I have mentioned that we will follow the non-commercial and we will do the opposite of the commercial. So look at the long contracts and look at the short contracts. There is a huge difference between the long and short contracts. The number of short contracts are more than the number of long contracts are more than the short contracts. So we will be also trying to be long and bullish on the GBP USD. And here look at the short contracts and the commercial category. So there are lots of short contracts. It means we will be following the non-commercial and we will do the opposite of the commercial. So guys, by looking at the core data, we came to know that the institutional order flow is extremely bullish on the cable. So we will also try to follow their footsteps. So what we will do, we will try not to go against the trend and against the institutional order flow. So now, as we can see, the market has took liquidity from these highs and the market has took liquidity from this high. The next target for the market is this high. The market is likely to take this high. And it is almost there, a few handles away from taking liquidity from that high. Then it is likely to make a higher high and break this key high. But all this will not happen in a single move. What we can expect, let's move to a lower time frame. What we can expect the market to make a pullback move and fill these gaps and then to make the impulsive move and continue its bull run. Guys, I will recommend you to practice patience in trading because in trading we wait for almost 90% for better entries and 10% of the time we do the executions. So my bias on the cable is bullish, but we can't enter the market at this area. We will wait for the pullback move. We'll wait for the confirmation of the candlestick. We will wait for a better level to enter in the market, which way the market will provide us a good risk to reward ratio. Traders, now let's move toward the AUD USD to see what is happening over there. First of all, let's look at the core data. Again, we are having two main categories of non-commercial and commercial. We will be following the footsteps of the non-commercial. We can see the contracts, long contracts and the short contracts, and we will also look at the change. What does the change mean? Like here 21046, these contracts were changed from the short, they were added in the long contracts. So it is a sign that the bullish move is likely to extend to the upside. And we will do the opposite of the commercials, what the commercials do. So they have shorted the market more than longing the market. So we will be following the non-commercials and we will do the opposite of the commercial. So here at the commercial category, the short contracts are more than the long contracts. It means we will try to be bullish on the AUD USD. And at the non-commercial category group, the long contracts are more than the short contracts. So this is the daily time frame of AUD USD. We can see the market was completely in the consolidation zone at this point, but above the consolidation zone there was resting liquidity. The market had to clear this liquidity pool, but above the liquidity pool, if you notice, we are having this fair value gap. The market reached out to the area of fair value gap and filled the fair value gap completely with the wick, and its body closed below the fair value gap. So it is a sign that as the market has filled the fair value gap, now it is time for the AUD USD market to come to the downside and to start, or let's say to transition from a bullish trend to a bearish trend. But now we will try to look for confirmation signals. At this point, this is like, now let's move to even a lower time frame. These are the highs. Okay, above these highs there resting liquidity. If the market but it is not mandatory for the market that it will take the high and clear the liquidity pool resting above it, because the market has already moved a great deal. Our market has already make a great move to the upside. It has took liquidity above the highs and it filled the fair value gap. So at this point in the AUD USD market, if the market forms a reversal pattern at this point, then the market is likely to transition to a downtrend. But if the market doesn't form a reversal patterns, then what we will do, we will wait for the market, then we will never go against the trend. We will try to align our entries with the trend till this area for the market to clear this high. So guys, this was all about the previous week and the forecasting session for the coming week for the gold market, Euro USD market, cable market, and the Aussie. So I wish you all the best for the coming week and see you in another session. Take care.